Once again it has started. Hello, 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 hello. हर किसी क्लास में ऐसे ही होता है क्या? हाँ, I'll tell him. हम्म. Hello. Am I audible, Rakesh? Are you there in the call? You just logged in. You also check whether I am audible or not so that we can start the session. So is that audible? Hello? 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 Yeah. Okay, then. Fine, so let me start the recording also. Now it is working fine. What I did was I elevated the laptop such a way that it fixes up. Because there is some problem with the pin. Okay. Fine, so I have also started the recording. Okay. So today what we will be doing is, first let us do one problem on the employee cost. Cost of employee cost, which is there in cost accounting standard 7. After that we will try to cover up 4 to 5 cost accounting standards as of today, and we will do 1 or 2 problems on that and conclude for the day. Okay? Yep. So since 50% marks is from cost audit, so we have lot of things to do in cost audit itself. And the practical sums, of course, you can do it easily if you remember or if you understand the cost accounting standards. But it's also easy to understand, nothing like very difficult as such. So first let us kickstart our session with a problem on cost accounting standard 7, which talks about employee cost. Okay? Yes. So let me just take the book for that. Give me a second. Yes. Over here, page number 276 of your book. Yes. This particular problem. No, the 276, not 276. Why this and this is totally different? This is illustration 11. Okay, the page numbers over here and the page numbers over in your book is different. I don't know why. Okay, illustration 11. We'll go by this. Okay. This is an illustration on cost accounting standard 7, which talks about what we got to do, include or exclude from the employee cost. Fine. So I'll just copy it on. I have created the link, Google Drive link. So far whatever we have done, I have posted in that. I'm yet to circulate that link. I'll do it today during the break so that you can go through whatever we have done. So I'm just continuing in cost accounting standard itself. So as and when I update, okay, I'll just do the one. Yes. Okay. A steel company which produces iron casting pipes and wrought iron is covered under the cost audit according to the company's cost records and audit rules 2014. From the expenditure data relating to 21-22, determine the employee cost employee cost according to cost accounting standards 7. Salaries, wages and other allowances. So we have 750 lakhs, it is rupees in lakhs, bonus 100 lakhs, contribution to PF 90 lakhs, wages to contractor employees. Contractors, employees. It's not employees who are on contract. And then employees welfare is 40 lakhs, abnormal cost due to strike is 80, and VRS payment for closure of rod iron section of the plant is 62 lakhs. Arrears in salary which pertains to the previous year 2021 is 210 lakhs. And then we have compensation paid against the past periods against the court order, which is 67 lakhs. Okay, so now what we are going to do is, we are just going to see what needs to be excluded or what needs to be included in each of the cases. Now coming to salary, wages and stuff and other allowances. Okay, salary, wages and other allowances, if you see. So will this salary, wages and other allowances be included? Yes, of course, it will be included. What about bonus? Yes, of course, it will be included. Contribution to Provident Fund, it will also be included. Wages to contractors, employees. So if you look at Cost Accounting Standard 7, it says that wages to some other contractors, employees will not be considered under the employee cost. So it needs to be excluded from our calculation. It should not be included. Okay. Then employees welfare, anything that you do for the, yeah? Huh? Yeah, wages to contractors, employees. It's not direct employees who are there. You are paying wages to their employees. That will not be taken under employee cost. Okay. And then employees welfare, of course we will take, and abnormal cost due to strike. So when it is abnormal cost, you won't consider at all. It will be shown separately. Then voluntary retirement payment. Okay. So VRS services which is paid for closure of rod iron section of the plant. As such, voluntary retirement amount is allowed. But here this payment has been made for which section of the plant? Of the plant that is abandoned or closed. If such is the case, then we cannot amortize. So do you remember what does Cost Accounting Standard 7 states about the employee cost when voluntary retirement things are paid? I'll just open the Cost Accounting Standard also, okay, so that it will be a good revision point. So if you come to the principles of measurement, see, here it says future benefits, VRS or other deferred employee cost is allowable. But why it is not allowed here? Because in this case, this is for a plant which is closed up. So that is why it's not allowed. So VRS ko dekhte hi don't come to a decision. Okay? That thing is one. And another thing, if you see contract employees include employees directly engaged by the employer on contract basis, but does not include employees of any contractor engaged in the organization. मतलब क्या है? Like, apart from the permanent employees, during season, if you need some more people to pitch in, or on a contract basis, if the company takes people for work, right? So that is allowed. But when you pay wages but does not include employees of any contractor who is engaged in the organization. Got it? So that is why over here, when it comes to wages to contractors, employees is not taken into consideration. But if it was given as wages to employees who are hired by the organization on contract basis, even though they are not permanent employees, they are hired on contract basis, then that amount will be included. So you should be very careful while you go between the lines of these provisions, which is very, very important. Got it? So, those who are online, are you not able to see the next screen that I am going through? Or it is taking time or delay? Because I just switched over to Cost Accounting Standard 7. I don't know why it's not switching off. Give me a second. Yeah, I think now it will switch. And that is what. Yeah. Excuse me. Excuse me. Sorry for that. So those who are online, is that clear? Are you able to see my screen properly? Are you able to read it through? Or do you have any problem? Yeah, fine, Anu. So that is why you should be careful about it. Contract employees, you always get confused with that. And compensation paid to employees for the past period of on account of any dispute or court orders shall not form part of employee cost. See, compensation paid against the past period and against court order, it will be just excluded. Got it? Then coming to arrear salary, of course this salary does not belong to this period, so it needs to be excluded. So what are the things finally you are going to take? Salary and wages of 750, bonus of 100, contribution to PF 90, employees welfare 40. That's it. That will form part of employee cost for the year. So you might be asking, okay, but anyway the company has incurred, and if we are going to we are going to do a reconciliation, right, with the cost records profit and with the financial accounting profits. But where will these amounts go then? See, it has been booked, entries have been passed. Only thing is it is not included in cost records for employee cost. But where will it go? For example, wages to contractors employees. It is a different case. Maybe it will be grouped under, you will see for which purpose they have taken, and it may be grouped under overheads. Employees welfare, yeah, abnormal cost due to strike, abnormal cost will be reported separately in your annexures. VRS payment for closure is also an abnormal thing, extraordinary item kind of a thing, which can be used for reconciliation purpose. Arrear salary is a similar case which will not be included in the employee cost. This is called prior period expenses. All such prior period expenses goes for reconciliation between profit as per cost accounting records and profit as per financial accounting records. Compensation paid against the past periods against court order. Originally, whenever there is a court order pending in the court and it is taking some time, that is more than a year to get a decision, there is always a contingent liability that arises due to that. So there could be cases where it may turn out to be favorable to you. There may be cases in which it may not be favorable to you. So in either of the cases, either you win or lose, in both the cases, first you have to declare this, disclose this in your financial statements. So if you look at financial accounting case, it will be given as a footnote in your balance sheet saying that there is a court case pending on, or there is a dispute that is going on which might result in a loss of or a penalty of. So this kind of a disclosure is what is expected. Okay. So this is done, so I am not going to calculate this. Then we move on to the next cost accounting standard. Okay, so cost of utilities, last time we saw about that steam, power, do you remember, and the enthalpy value loss and stuff. So that is cost of utilities. So main thing cost of utilities talk about is you have to always prepare a different cost sheet for different utilities. You should not club them together. Utilities is important because majorly material cost, utilities and other industry specific expenses form part of the major cost. So that is why our cost accounting standard actually insists upon giving the details of these things separately in the cost audit report. Then coming to packing material cost. So what is that packing material cost they are talking about? So we have not gone through this, right, packing material cost. So let's go through cost accounting standard 9. So this speaks about packing material cost. So I am directly jumping into the principles of measurement, which is very important. And over here under 4 you have the definitions, of course. So yeah, So few definitions that are relevant and very important to this cost accounting standard, I will just take you through that, okay, and others we will just skip and go to the principles of measurement. Coming to distribution overheads, because packing mein kya hai, there are two types of packing materials. One is primary packing material, another one is secondary packing material. Primary packing material will form part of cost of production, whereas secondary packing material will form of distribution overheads. So see over here, secondary packing, transportation cost, warehousing cost, cost of delivering the products to consumers, clearing, forwarding charges, and all those things. And another thing is, yeah, when we come to interest and finance charges, okay, there is one thing you got to understand. So there are certain things wherein we take on lease and we pay the charges for that. So there are two types of lease. One is operating lease, another one is financing lease. So when it comes to operating lease, whatever charges you pay will form part of direct expenses directly. But when it comes to financial lease, wherein you pay a lump sum amount, right? So that finance cost will be treated separately under finance cost. So while we go through the cost accounting standard on direct expenses, you will come across that particular terminology. But while we come to operating and financial lease, you should be very careful about it, ki what should go and what should not be forming part of your finance cost. Coming to secondary packing material, see these information such as the examples, usually from the exam point of view, they never ask a question directly. Instead, they will give a case or they will give an example and they will ask you to comment on that, and that will be forming part of your MCQs. So over here under secondary packing material, you have some examples, like for example in a pharmaceutical industry, cartons that are used for holding the strips of tablets and cardboard boxes used for holding cartons, they are all secondary packing material. When we come to textile industry, cardboard boxes used for holding the cones. See, if you look at the cone that is used, that is around which the thread is being spinned around, that cone is a primary packing material, because you cannot handle just like that, or else it will get tangled. The whole yarn will get tangled. But coming to the cardboard boxes is the way to store those things that are produced. So cardboard boxes in textile industry, which is used to hold these cones, or secondary packing material. Coming to confectionery industry, our favorite ones. So jars for holding the wrapped chocolates, like we find it in a medical shop or in anywhere, any shop. So whatever jar or bottle that they have is a secondary packing material. But the wrappers that is there for the chocolates to wrap up is a primary packing material. So primary packing material, that is chocolate जिसमें नहीं, बिकॉज अब चॉकलेट में, छोटे टॉफीज में क्या होता है, एक वाइट कलर का पेपर रहता है, उसके बाद द ब्रांडेड वन इज देयर, बट यू नीड दैट टू होल्ड इट, ठीक है. लेकिन बाहर जो वो एक कंटेनर या बॉटल जार में रखते हैं, राइट, दैट इज सेकेंडरी पैकिंग मटेरियल. सो दैट इज द वे दे हैंडल बल्क ऑफ थिंग्स. Okay, and even in chocolates, yeah, sometimes while you buy biscuits or chocolates in bulk, have you seen कि एक बहुत बड़े बॉक्स में, like if you buy a 1 kg biscuit packet, how it will be, there will be individual packets inside a big carton box. The individual packets में क्या लिखा रहता है, it cannot be sold separately, right? It is part of that final product. The individual packages as well as the carton that is used to hold all these things are primary packing material, because without that you cannot measure 1 kg of biscuits, right? And you cannot pack 1 kg in one single packing. That can never happen, because what happens is the freshness will go off. You cannot, the uses of that product becomes difficult, right? So that is why people prefer multiple packs in a single pack. So that is one kind of product packaging stuff, how they design. Got it? Because product packaging is also a creative thing. It should facilitate the consumer. That is, the consumer should feel the ease of using it. If I open a 1 kg biscuit packet, will I be able to consume the same day? It is not possible. Then what about the freshness? The freshness will go off. But if it is in different packs in the same carton, it becomes easier. Right. So what I would as a consumer prefer, that kind of a packaging which helps me to hold it for a longer period of time. So product packaging itself is like an art. Okay. So how they design the product and how they make the product look attractive, that is also there. So kai log, they get carried away by the packaging stuff. So that is also important. Anu is on hold. What happened? Okay, fine, she's back. So likewise, yeah, now coming to principles of measurement. So whenever you are preparing for your exam, choose this principle of measurement for all the cost accounting standards, give a read through, that will help you to work on practical problems as well as MCQs, okay, all the cost accounting standards. So principle of valuation of receipt of packing material. The packing material receipts should be valued at purchase price. It is always invoice price including duties, taxes, freight, inwards, insurance, everything, and the direct expenditure which is directly attributable to it, net of trade discount. So cash discounts is totally excluded, rebates, taxes and duties which are refundable or to be credited, that can be quantified at the time of acquisition. Next, example, see Senvat credit, it's not there now, so you just ignore this example. Finance costs directly incurred in connection with the acquisition of packing material. Wherever you see the finance cost, it will never be booked to that particular cost. It will be shown separately under finance cost. So that needs to be taken off. Sometimes packing materials could be self-manufactured. If you are manufacturing in your own factory, then in that case it will include all the cost that needs to be included for it, like direct material, direct employee, direct expenses, job charges, factory overheads. So all these things will be taken into consideration. When the valuation of captive consumption of packing material happens, it will be according to cost accounting standard 4. So cost accounting standard 4 talks about captive consumption, transfer pricing and stuff. So if you see here, cost accounting standard on cost of production, acquisition, supply of goods, provision or services. First it was talking about this captive consumption, but now it has changed to this particular title. And then coming to our thing, yeah, normal loss or spoilage of packing material prior to receipt in the factory shall be absorbed in the cost of balance materials. Normal loss, the total cost divided by number of good units, that you should always remember. Abnormal cost will be taken care by that, which is, will be absorbed by the units that you have lost. What about the forex component? Always it needs to be converted on the date of transaction. Please do remember this. This was also there for material cost. So wherever foreign exchange transaction is involved, because you may sometime import the packing materials or import the materials itself. So wherever there is an import involved, please see to it that it is converted on the rate at the date of transaction and nothing else. So let them give forward rate, let them give options or whatever may be the case, that is the date of transaction which will come into existence. Demurrage, detention charges, penalty is always excluded. This will form part of reconciliation between profit and loss as per costing records and profit and loss as per financial records. Any subsidy, grant, incentive, that needs to be adjusted. How do you value this issue of packing material? Once again, it goes by FIFO, LIFO and weighted average rate, whichever way you want. But usually kya hai? They use weighted average cost itself for everything. FIFO, LIFO, it is very difficult to keep track of all those things. And it should be followed on a consistent basis. Not that this year you do a weighted average, next year you do FIFO, next year you do LIFO, then accordingly your profits will be manipulated, which is not expected out of you. Wherever packing material cost include the transportation cost. that needs to be included. So that is what cost accounting standard 5 talks about. What are the costs that needs to be included as per cost accounting standard 5? It shall not include imputed cost, that is fine. And where it is accounted at standard cost, then you have to look at the price variances and include accordingly. If the variance is normal, then you can include. If it is abnormal, it needs to be reported separately. Then the normal loss arising from the issue or consumption of packing material shall be included in the packing material cost. See, always normal loss needs to be included. Abnormal loss is to be excluded. The credits or recoveries in the nature of normal scrap that will be adjusted towards the cost. That is, that will be deducted from the packing material cost. That is whatever is left over packing materials. And what you are doing, you are putting it to the second hand shop or the scrap shop and they are giving you the money. So that will be adjusted towards the total cost. So that is what is all about packing material cost. So then coming to direct expenses, which is very important, okay. So sometimes we get confused whether it's a direct expense or an indirect expense. So direct expenses form part of your cost of production. So it is easy to identify a material cost. It is easy to identify an employee cost. But when it comes to direct expenses, whatever is directly related but doesn't fall under the category of material and labor will go into direct expenses. Got it? So here if you see, I'll directly take you through the principles of measurement, okay? That is what is important. Identification of direct expenses shall be based on traceability. That is where you can trace it to a particular cost object or a cost center or a profit center. Direct expenses incurred for the use of bought out resources shall be determined at invoice or agreed price, including duties, taxes and net of trade discounts. This is repetitive everywhere in all the cost accounting standards. But what are the examples? That is more important. For example, so direct expenses other than those referred in this paragraph shall be determined on the basis of amount incurred in connection therewith. So this example is a beautiful example on that. In case of dies and tools produced internally, the cost of such dies and tools will include direct material cost, direct employee cost, direct expenses, factory overheads, including the share of administrative overheads which is related to the production. In case of research and development cost, that is R&D, the amount traceable to the cost object for development and improvement of the process for the existing product shall be included in direct expenses. So while we did form CRA1 and while we looked at R&D, R&D can be for variety of purposes. First, it can be for a new product, new innovation, a new idea that you want to bring it. So at that time, it will not be treated in the product cost because the production that you are making is no way concerned to that research and development. But there could be an R&D for improvising your existing process. So if it is for that case, if that R&D is incurred for improvising your process, like for example, it cuts down the process time or it increases the productivity, such kind of an R&D is related to that production or product. In that case, this amount will be traced to direct expenses under that product category. So be very careful about such kind of an R&D, because R&D sunte hi, the thing you should not think about it, oh it will be towards a new product launch. You should actually read through the lines and understand whether this is for improvising the existing process or it is for a new product launch. If it is for a new product launch, of course you cannot adjust with the existing products. Okay. Then coming to direct expenses paid or incurred on lump sum. This lump sum is one other thing. Lump sum payment, like for example, you pay royalty or technical know-how fees for say 5 years together in a lump sum manner. But you are going to use it for 5 years. So what you got to do is you have to amortize the amount and charge it under direct expenses. That is what it says. So royalty or technical know-how fees or drawing designing fees are paid for which the benefit is ensued in the future period. In such case, it shall be estimated for the effective period and based on the volume. Sometimes the royalty and technical know-how is also paid based on the production. So we will look into that kind of a problem also. If an item of direct expenses does not meet the test of materiality, if it is not material, but at the same time you cannot exclude it, so where do you put it? You put it under overheads. Finance cost, always it is excluded from direct expenses and it is shown separately. Direct expenses shall not include imputed cost, and where it is accounted at standard cost, variances can happen, and if those variances is due to normal reasons, then you can include it. If it is due to abnormal reasons, it needs to be excluded. Any subsidy, grant, incentive, it is same across all the cost accounting standard, and any abnormal portions that is material will not always form part of the direct expenses. Penalties, credit recoveries, these are all the common ones. Okay, so what we will do is we will do a problem on this. So page number 279 of your book. So I'll just switch to the book. Okay, that is what the numbers are there. This is illustration 14. Okay, yeah, this will be interesting. T Limited, a manufacturing unit, produces two products, PB and PS. The following information is extracted from the books of the company. Unit produced in quantity is 2,10,000 and 1,68,000. Units sold is 1,68,000 and 1,36,500. Machine hours utilized is 1,26,000 and 84,000. Design charges 1,57,500, 1,89,000. Software development charges is 2,62,500 and 3,78,000. Okay, and then you have royalty is paid on sales this much, which is 2 rupees per unit sold for both the products. Higher charges of royalty paid on units produced is this much, which is charged based on 1 rupee per unit of production unit produced for both the products. Higher charges of equipment used in the manufacturing process of product PB is only rupees 53,000. No adjustments are to be made related to units held, that is closing stock, because unit produced and unit sold are two different things. So this will give rise to a closing stock, but we don't have information about any stock and they have asked us to ignore that totally. You are required to compute the direct expenses keeping in view cost accounting standard 10. Even before looking at this direct expenses question, just by looking at the table, you know very well design charges is directly related to or traceable to that product. So that means this cannot fit in your material, this cannot fit in your employee cost, so it will go to direct expenses. What about software development charges? Since it is traceable, this is called traceability. See, they are able to say that 2,62,500 is traced to product PB and 3,78,000 is traced to product PS. So all these will form part of direct expenses. Design charges, software development charges. Then coming to royalty. When you are going to compute direct expenses, you are going to do product wise. But here they have given royalty is paid on sales of 6,09,000. So how much is your sales? 1,68,000 plus 1 lakh. Okay, on sales is rupees 6,09,000, wherein rupees 2 per unit is sold for both the products. So what you have to do? Unit sold 1,68,000 into 2, 1,36,500 into 2 you got to do. So if I put it in a calculator, so 1,68,000 into 2 is 3,36,000, then 1,36,500 into 2 is 2,73,000. So if I add 2,73,000 plus 3,36,000 It comes 6,09,000, which is exactly the same. So this is how I am going to split my royalty paid on the basis of sales to both the products separately. When it is coming to units produced, so if you see here, 1 rupee is per unit produced for both the products. So 2,10,000 is ka and 1,68,000. So you can just split it into 1, it comes to 3,78,000. So I have to put these two things separately. Now coming to machine hours utilized. So machine hours utilized is 1,26,000 and 84,000, but I don't have any information regarding it. So I am just closing it. Instead they have given higher charges of equipment used in the manufacturing. This is an equipment. We don't know whether it is machine or it is something else. It is used in the manufacturing process of product PB only. So under PB I'll show 53,000. So if I do the calculations are all straightforward. There is nothing to worry about it. The thing is the presentation and what needs to be included or excluded. See, they have done the same thing. So all these things attribute to your direct expenses. ठीक है? Any doubts? Those who are online? Are you clear about cost accounting standard 10, which talks about direct expenses? Yes?
Yes, ma'am.
Even a thumbs up will do. Yeah. So shall we move on to the next cost accounting standard? So direct expenses is done. Next comes administrative overheads. So once again I am just going to the principles of measurement. What does it say? So administrative overhead shall be the aggregate of cost of resources consumed in activities relating to general management and administration of an organization. So what are the principles? The principles of measurement of material cost, employee cost, utilities, repair and maintenance, depreciation found in the respective standards will apply to these elements included in administrative overheads. So administrative overheads includes all these costs, but that is which is not related to production directly will come under administrative office and administrative overheads. That you should be careful about. So once again it has started jumping. I don't know what happened to this. Then in case of leased assets, this is very, very important. If the lease is an operating lease, just mark it down. This is a very important clause. If the lease is an operating lease, the entire rental shall be included in the administrative overheads. If it is an operating lease. Okay. If the lease is a financial lease, the finance cost portion alone will be taken and that will be treated as part of finance cost. So you should be very careful about such leased assets. If it is owned assets, directly straightforward we put depreciation. But if it is a leased one, that is a problem. You have to find out whether it is an operating lease or a financial lease and you got to do it. So please mark this particular point as important in your book. It is the same in your book. So I don't think there will be any difference. Once again it has started. Then coming to cost of software developed in-house or purchased or licensed or customized, including upgradation cost, shall be amortized over its estimated useful life. So it is regarding the cost of software. Software ही intangible asset है. Intangible we always do the amortization, but it could be developed in-house. That is R&D करके भी आपने वो software लिया होगा. Another thing is you would have purchased from outside, or it is a licensed product, or you have purchased and then you have worked on the customization. Customization happens. So do you know what is customization of software, right? Like for example, if you need some language specific, then you can customize it according to your language. If you want according to the process that is going on, which is not offered by the system, then you will catch hold of those people who have sold you the resources, I mean, who have sold you the software, and you will ask them to customize that according to your organizational requirements and reporting requirements. Okay. So yeah, then when hardware requires upgradation along with the software upgradation, it is recommended that compatible estimated lives be used for two sets of cost. Because if hardware software both are together, then at least both should be almost easy to judge, and it should be compatible to two sets of costs so that you can amortize and depreciate accordingly. The cost of administrative services procured from outside, always when you go for an outside purchase, you will go with invoice or agreed price including duties, taxes and other things adjusted for net of discounts other than cash discount. Taxes and duties refundable or to be credited. Any subsidy grant, that is the same. And if you have any abnormal administrative cost, then that needs to be excluded. Like for example, in natural calamity, agar kuch cost hua hai aapka, then that needs to be excluded. Fines, penalties, damages, credit recoveries, all these things hold the same across all the cost accounting standards. So the important one over here is leased asset, how to handle an operating lease and how to handle a financial lease, and then cost of software and cost of hardware. These are the important points. Okay, so I don't know whether there are any problem on this in our book. This is cost accounting standard 11. No, administrative cost पे तो कुछ नहीं है. Okay. So next, let's move on to cost accounting standard 12, which talks about cost accounting standard 12, which talks about repairs and maintenance cost, which is equally important. Okay. So once again, I go here. Repairs and maintenance cost. Okay. So once again, under repairs and maintenance cost, we will directly go to the principles of measurement. Okay. So if you look at repairs and maintenance cost, it shall be aggregate of both direct and indirect cost relating to the repairs and maintenance activity. Direct cost include the cost of material, consumable stores, spares, manpower, equipment usage. Okay. And then the indirect cost, and other identifiable resources which are consumed. Indirect cost, or which is common in nature to various repairs and maintenance activities, such as manpower, equipment usage and other costs allocable to such activities. So repairs and maintenance cost includes both direct and indirect cost. You should be careful about it. Cost of in-house repairs and maintenance activity. In-house is something that is happening within your organization. You have a support function. It's not like always you will call for an engineer from outside, a support engineer from outside to do this repairs and maintenance work. You will always have a separate department, which is not a production department but a support department. So in that case, whatever is the cost of material, consumable stores, spares, manpower, because you are having your own people there, equipment usage, utilities and other resources used in such activity. Now, if it is carried out by outside contractors, inside the entity shall include charges payable to the contractor and cost of materials and other things. This is like having the person who has sold the product. The product engineers, they belong to that company, but on a contract basis, they are with you for the repair and maintenance. This is in case of very critical kind of operations. They pay the engineers there and they keep them there in the site because they cannot even forgo a minute, a downtime. Okay. Yeah. A downtime in their thing. Just a minute. Yes. Yeah. Then coming to cost of repairs and maintenance of jobs carried out by the contractor at its premises shall be determined at, once again, invoice price, agreed price and stuff. If it is carried out by outsider contractors, shall include the charges made by the contractor and cost of own materials. Either you give your materials or you give entire thing to the contractor. Accordingly, the cost will be accounted for. Each type of repair and maintenance shall be treated as a distinct activity if material and identifiable. For example, routine or preventive maintenance, planned maintenance and breakdown maintenance should be identified separately. Well, coming to each asset category, if there is a major repair and maintenance, for example, in sugar factory what happens is, only from November to March is the season of crushing. So only during that, November, December, January, February and March. So 5 months the factory will be on. But what about the 7 months? Other 7 months. Other 7 months only repair and maintenance will they carry over only those things. Repair nahi hoga, maintenance karte rehte hain, so that the factory is functional for the next 5 months without any breakdown. Because if you just leave it like that, right, what will happen? There will be a breakdown, there will be rust formation and all those things. So they constantly clean and maintain all those equipments so that it's ready for crushing for the next 5 months. So 7 months there will be also an engineer who will be there, will be taking care of these maintenance stuff. Cost of repairs and maintenance activity for each asset category should be maintained separately. Cost of spares replaced which do not enhance the future economic benefits from the existing asset beyond its previously assessed standard of performance shall be included under repair and maintenance cost. What is this cost of spares and why they are insisting so much on cost of spares? This is an important point. See, cost of spares. Spares could be either to enhance the existing machinery's productivity or to set it right. If it is to set it right, the existing machinery or something, it will be booked under repair and maintenance. But if it is going to enhance the future economic benefits, that is enhance the productivity of that machinery, then in that case it will be added to the machinery cost, asset cost, and will be depreciated. So cost of spares, though it sounds like it's a spare, you should always see to it for what purpose this spare is there. Is that to take care of the existing machinery? It is not going to enhance any productivity. For example, in our inter subject in financial management, in management accounting, when you do marginal costing, always you get a problem ki whether we can go about with some modification with the existing machinery or shall we purchase a new machinery. So if you go with the modification of the existing machinery, then that is as good as making its economic future benefits to go up. In that case, you will depreciate it, you will not book under repair and maintenance. But if it is for setting it right or keeping it or maintaining it, then it will be booked under repair and maintenance. So this is an important point on cost of spares. Then coming to high value spare. So while we look at the spare value, that will also have an impact. So what do? We usually include it in the cost. So high value spare when replaced by a new spare and is reconditioned shall be recognized as part of PPE. What they will do, they will add it to the property, plant and equipment. They will depreciate it. Okay. So this is how it happens. This example is a really good example about this. A company purchased equipment for 10 crores. And insurance spare for rupees 1 crore. This is a new spare, okay, it's not insurance spare. If the company is covered under Indian accounting standard, such spare is capitalized as PPE. After use for 5 years, the equipment broke down and a part was replaced with the aforesaid insurance spare. It should be insured spare. After 5 years, the depreciated value of the equipment is 5 crores. This equipment has become 5 crores. As PPE are depreciated when they are available for use, accordingly the depreciated value of the new spare is rupees 50 lakhs. That is, from 1 crore it has gone down to 50 lakhs. The old spare was reconditioned and the cost of reconditioning is 10 lakhs. That is, a 50 lakhs worth thing was reconditioned. It was not scrapped, instead it was reconditioned. As per the estimated life of the old spare for future economic benefits, the current market value of the reconditioned old spare has been estimated at rupees 25 lakhs. The amount to be treated in repairs and maintenance is rupees 35 lakhs, which is calculated as follows. How do you do that? See, there was already an equipment purchased for 10 crores. But for this, for the usage of, to put this equipment for production, you need a spare for 1 crore. So you know very well that this needs to be capitalized as per Indian accounting standard. Once it is capitalized as an asset, it is subject to depreciation. So here, though they have not given the depreciation methodology, but they have given that from 10 crores it has gone to 5 crores. So matlab 5 crore ka ek depreciation, and from 1 crore it has gone to 50 lakhs. So another 50 lakhs ka depreciation. So 5 crores and 50 lakhs till date is the depreciation for 5 years, which gives you the depreciated value of equipment and spare as 5 crores 50 lakhs. So did you understand till here? Yes? I don't know why it is often jumping. So when it is 5 crores 50 lakhs, now what you have done? The old spare has been reconditioned. For how much? 10 lakhs is the cost for that. That is what they have given here. Okay. And depreciated value of old spare is 50 lakhs. So the book value of reconditioned spare is 50 plus 10 lakhs, 60 lakhs. What is the current market value of the reconditioned spare? It is 25 lakhs. The book value shows 60 lakhs, but the current market value shows 25 lakhs. So 35 lakhs, the difference will go to your repairs and maintenance account. So did you understand this problem? So this is a conclusive problem, conclusive and inclusive problem which takes into account a very important thing for repairs and maintenance as per cost accounting standard 12. This is in case of high cost spares, costly spares, high value spares. Got it? Any doubts in it? So it looks as if you are revising your cost as per the fair market value, revaluing your asset. But here you are not revaluing the asset, it is like revaluation of your spare, right? Because market value is 25 lakhs, but what you have done has resulted in 60 lakhs. So that means, keeping the market value in mind, the remaining amount you are booking it to repairs and maintenance. Got it? This is a very important problem. Please do mark it in your book, okay, which elucidates your entire cost accounting standard 12. Yes? And what about cost of major overall? Overall shall be amortized on a rational basis. Finance cost, anything in connection with repair and maintenance, will be excluded from repairs and maintenance cost. That will hold good. And what about major overall? It will be amortized on a rational basis. It shall not include imputed cost. Price variances will always be there if there is a standard cost being maintained. And if the variance is normal, then it will be included. If it is abnormal, it shall be excluded from repair and maintenance costs. Other things remains the same. Okay, abnormal circumstances like major fire explosions, flood and similar events or abnormal events. Uske wajah se, if you are facing any losses, repair and maintenance cost, then in that case it is abnormal in nature, it should not be included in repairs and maintenance. And other things remain the same. So the important point under repair and maintenance is how to value high value spare, what if cost of spares is replaced and which is going to enhance the future economic benefits, these 2 points. And the third one is repairs and maintenance to be treated as a distinct activity if material and identifiable, like routine, planned maintenance and stuff will be taken into consideration. So, are you all fine with this on repair and maintenance? The same problem they have illustrated in your book. So, I am not going to do the same problem. That is illustration 15 talks about cost accounting standard 12 in your book. So, that is what we have already discussed now. Okay. So, let's take a 10 minutes break and meet for the next cost accounting standard. Okay. Yep. I'll just mute myself. Please stay online. Okay, let's continue. Yes, so we have seen till cost accounting standard 12. Okay, coming to cost of service cost center, which is being discussed in cost accounting standard 13. What about cost of service cost center? So that which provides services to other production departments. Okay. So I am directly getting into the principles of measurement. Each identifiable service cost center shall be treated as a distinct cost object for the measurement of cost of services subject to the principle of materiality. And it shall be aggregate of both direct and indirect costs. That is, we have to prepare a separate cost statement for the service department also. Cost of in-house services shall include cost of materials, consumable stores, spares, manpower, equipment usage, utilities and other resources used in such services. And when we talk about services rendered by the contractors, but the facility is our own facility, but the contractors are rendering services in that. So whatever fees is paid to them, along with that, whatever cost of material, consumable, stores, spares, whichever we incur in connection with that service department should be taken into consideration. And when it is rendered by contractors at their premises, it is not in the company's premises, but the contractors provide from their premises itself, then it will be the agreed price or the invoice price, net of trade discounts, that is discounts other than cash discounts, taxes and duties refundable or to be credited. Then coming to inter-unit transfers, when the service is transferred from one unit to another unit, always distribution cost will be added along with it. Sometimes this services can be provided to the outside parties. So you have to add in the selling and distribution overheads also along with it. That is the marketing overheads. That is what is discussed. As such, finance cost is excluded, imputed cost is excluded. If it is accounted at standard cost, then variance will be taken into account if it is due to normal reasons. If it is due to abnormal reasons, it will be excluded. Any subsidy, grant, incentive, it should be reduced from the cost ascertainment, and cost of production and distribution of the service shall be determined based on the normal capacity or actual capacity utilization, whichever is higher. This is very important. So we have already seen a cost accounting standard on capacity determination, which is there in cost accounting standard 2. Accordingly, you have to go by the normal or the actual capacity utilization, whichever is higher. Based on this, cost of production and distribution needs to be determined. But what if it is, what if there is any unabsorbed cost? If any, it shall be treated as abnormal cost. So this is an important principle of measurement which you have to make a note of it. Then coming to cost of standby service shall also include the committed cost of maintaining such a facility. That is, a standby service is always available, but it is used only when there is a necessity. But that doesn't mean that you don't maintain it. For example, we have fire extinguishers. It is not like day in and day out you will be using it, but still you are having it in your facility. For what purpose? It's a standby support. But you also incur cost to maintain that. So that will be also included in the cost of production. Any abnormal cost where it is material and quantifiable shall not form part of the cost of services. It's the same clause regarding penalties and damages, credits and recoveries. Okay, so this is all about the service cost center. Then coming to pollution control cost. Pollution control is a very important perspective, because always there are chances of levy of penalties and stuff which will be excluded actually. Okay, and here you have a lot of things on what is soil pollution, what is taken as water pollution and stuff. we are directly getting into the principles of measurement. Okay, if we get into the principle of measurement, yes, yeah. So what is the pollution control cost shall be aggregate of direct and indirect cost. But what is direct and indirect cost? Examples is very important. When it comes to direct cost, it includes cost of materials, consumable stores, spares, manpower, equipment usage, utilities, resources for testing and certification, and other identifiable resources consumed in activities such as waste processing, disposal, remediation, and others. These are all direct costs which are related to pollution control. For example, in case of sugar and distilleries, there is always a water treatment plant which is treated as an utility, and this water treatment plant has a separate cost sheet being prepared. So what does this water treatment plant have in its cost sheet? So like you may be using the equipments through which the water is disposed, okay, and treated. So you will be using certain chemicals, so cost of chemicals will be part of it, and you will be having a manpower allocated to that particular plant. So that manpower cost will be your direct employee cost, and apart from that you will be having discharge from both sugar as well as distilleries which is going through one plant. So in that case, whatever is the waste, so the cost will be ascertained and then it will be allocated to distillery separately and sugar separately. So this is how it happens in case of a sugar and distillery industries. So there are many industries which actually have a lot of pollutants that are discharged in the water bodies. So when it comes to discharge of things in water bodies, they have water treatment plants. So it's all regulated under Pollution Control Board, that is the State Pollution Control Board. Indirect cost includes the cost of resources common to various pollution control activities such as pollution control registration and such like expenses. So where you register, where you pay for the inspection fees to the authorities who come from the Pollution Control Board, all those are indirect cost, which is related to it, but it is not directly into pollution control expenses. So this is an important principle of measurement that you got to remember. Then moving on to cost of pollution control, which are internal to the entity, should be accounted for whenever it is incurred, and it is always measured at historical cost. Coming to future remediation or disposal cost, which are expected to be incurred, that is, you have discharged that particular waste in the water bodies and you know very well that you got to set it right as per the contract or constructive obligation which is legally enforceable, then this needs to be quantum. I mean, this needs to be quantity wise, it should be accounted for in the period in which it was generated. Excuse me. For example, future disposal cost of solid waste generated during the current period should be estimated on, say, a per ton basis. So per ton of production ke liye kitna pollution is happening, and that will be measured across. Contingent future remediation or disposal. This is contingent. So sometimes there is some legislative procedure going on, or there will be levies that will be charged on a particular company and all these things. So in that case, it is contingent. It may or may not arise. Okay, but still what it needs to be done, it shall not be treated as cost unless and until you incur that particular cost. So external, for example, external cost of pollution, which are generally the cost imposed on external parties, including social cost, are difficult to estimate with reasonable accuracy. And at the same time, social cost of pollution are measured by economic models of cost measurement. The cost by way of compensation by the polluting entity, either under future legislation or under social pressure, it cannot be quantified by the traditional models of cost measurement. So they are best kept out of general purpose cost statements. So usually a separate disclosure will be made for these things. In-house pollution control activity, that is, you have your own water treatment plant or waste treatment plant. Whatever is the cost for that particular plant will be treated separately, and that will be booked under pollution cost. Cost of pollution control activity carried out by outsider contracts but within your entity. So whatever charges you pay to the outsider contracts along with the cost of materials, consumables, spares, manpower, everything will be taken into consideration. Sometimes it is totally outsourced to the contractors who do it in their premises. In that case, whatever is the invoice or agreed price will hold good. Then coming to jobs carried out by outsiders, contractors shall include the charges made by the contractors and cost of materials. This is in case of job costing, okay? And each type of pollution control, water, air, soil, it needs to be treated differently and distinctively. You cannot club everything under one particular head. Finance cost incurred in connection with the pollution control activities will once again not form part of it. Pollution control cost, if it is imputed cost, it will not be taken into consideration. Any price variances, if it is due to abnormal reason, it will be excluded. Normal reason, it will be included, and all other things proves the same. Coming back to research and development cost. See, whenever we look at research and development, one thing is it can be for totally a design and production of a new product. Second thing is it is improvement in the existing process. Third thing is, if research and development cost is to develop new process or new products or use of new materials to avoid or mitigate pollution, mitigate in the sense transfer the pollution, shall be treated as research and development cost and shall not be included under pollution control cost. This you got to remember. Okay, so development cost incurred for commercial development of such product, process or material shall be included in pollution control cost. But whereas if it is for a new process, new product or use of new materials, then it should not be included under pollution control cost. It should be included under R&D. Got it? Then. And that's all on cost accounting standard 14. So you have 2 to 3 points which are important out of this. Okay, so if the activity is separate, that is you have a treatment plan for water separately, air separately, soil separately, it should be treated separately and accounted for separately. It should not be clubbed together. And R&D part is important. How do you treat? So cost accounting standard 14 is done. Then coming to cost accounting standard 15, which talks about selling and distribution overheads. So once again I move on to the principles of measurement. Okay. So what are the selling and distribution overheads? So we need to basically think about after sale services too. So post sales costs such as warranty cost, product liability cost, after sale service shall be estimated on a reasonable basis. Why on a reasonable basis? Because in the beginning, while you sell a product, you don't know, even though you sell it with a warranty, right? You don't know unless and until there is a defect or someone gets back to you for service. But still it should be reasonably estimated, maybe due to the data, previous trends. With that you can go, or with an assumption ki itna percentage of sales can come back for warranty claim or can come back for services within the warranty period. So that needs to be taken into consideration as warranty cost. Then coming to selling and distribution overhead, the benefits of which are expected to deliver over a longer period of time. Whenever the benefit is not for 1 year and more than that, usually it is amortized over a period of time. Selling and distribution overheads shall not include imputed cost, that you know very well. Cost of after sale service. This is a point of discussion always. Provided in terms of sale agreement for a class of transactions shall be determined on rational and scientific basis, net of any recovery on the service. Any subsidy, grant, incentive, everything needs to be adjusted. Any abnormal cost shall be excluded. Any penalties, demurrage, detention charges, all those which are charged by either the transportation authority or by the government needs to be excluded. It will not form part of your selling and distribution overheads. Credits and recoveries needs to be adjusted. Okay. and that is all about selling and distribution. So selling and distribution may one thing that you got to understand is this one, cost of sales service, after sales service, which we have to just estimate. We cannot certainly tell that this is the cost that we are going to incur in future, and that is what. And selling and distribution overheads, it's just not for the period in which it is incurred, it is for a longer period of time. That is, for example, warranty is for 5 years. Okay, so warranty period ka jo hai, that is included under selling and distribution overheads, but this is spread across 5 years term. So this will be amortized over 5 years and it will not be booked in the same year. So that is what they mean through cost accounting standard 15. Then coming to depreciation and amortization. So let's see how it is different from our Indian accounting standard. So coming to principle of measurement, depreciation and amortization shall be based on the depreciable amount and the useful life. So it's the same that we do in our usual financial accounting depreciation. The residual value of an intangible asset shall be assumed to be 0 unless there is a commitment by a third party to take that asset, I mean intangible, and there is an active market for the asset where you can realize some money out of it, or else usually intangible assets don't have any residual value. The minimum amount of depreciation to be provided shall not be less than the amount calculated as per principles and methods prescribed by any law or regulations applicable to the entity and followed by it. So it is as good as whatever. If the Income Tax Act is applicable, of course you have to go by that. Okay, so applicable law needs to be considered. In case of regulated industry, it shall be the same as prescribed by the concerned regulator. While estimating the useful life of a depreciable asset, what are the things that we got to take into consideration? Expected physical wear and tear, obsolescence, legal or other limits on use of the assets. What about the useful life of an intangible asset that arises from contractual or other legal rights shall not exceed the period of contractual or other legal rights, but may be shorter depending upon the period over which the entity expects to use the asset. That is the period for which the intangible asset will be taken into consideration. Usually it shall not exceed 10 years from the date it is available for use. So this is the important clause that you got to remember. So the useful life of an intangible asset in any situation shall not exceed 10 years from the date it is available. Hello. Yeah. Sorry, I had to change the batteries. Yes. Depreciation of an asset begins when it is available for use. That is, when it is in the location and condition necessary. So for example, see, they have talked about fire extinguisher, standby generator, safety equipment shall be considered to be an asset available for use. Not necessarily it is used, but it should be in the condition to use. Okay. So depreciation of an asset ceases at the earlier of the date that the asset is classified as held for sale or the date that the asset is de-recognized. Whichever is earlier, that will be taken into consideration. So this is a very good example of in case of assets that are available for use, they are not put into use. Their usage will come into existence only when such particular situation arises. If not, they will not be used. But you cannot depreciate it based on that it's not used for that period. It is in a workable condition which is held ready for use. So this is an important point that you got to note under depreciation. Coming to depreciation of an addition or an extension, of course that will be integral part of the depreciable asset, and that needs to be added. So it is same as our financial accounting standard. Depreciation of any addition or existence, as a separate, retains as a separate identity, is capable of being used after the expiry of that asset, shall be based on the estimated use of life of that addition or extension. That is, when you have an addition to it and you can recognize it separately, and that has a life more than that of the original asset. In that case, the impact of higher depreciation due to revaluation of assets shall not be assigned to cost object. Always, revaluation of assets and a higher depreciation due to that will be never considered. This is same as our Indian accounting standard. Impairment loss on asset shall be excluded. Okay, the method of depreciation should be used to reflect the pattern in which the asset's future economic benefits are done. So you have different examples based on which the method is used: straight line, diminishing balance, unit of production method. This needs to be actually disclosed in the cost accounting policy itself. Okay, what is the depreciation method that has been used? And the depreciation method should not be frequently changed. Okay, that is very important. It should be changed. If it is changed, then it needs to be disclosed. The methods and rate of depreciation applied shall be reviewed at least annually, and if there has been a change in the expected pattern of consumption or loss of future economic benefits, then the method applied shall be changed to reflect the change pattern. See, evaluation review should happen annually, but that doesn't amount to changing of it annually. So that you should be very careful about, only if it demands. Items such as spare parts, standby equipment and servicing equipment are recognized as PPE when they meet the definition of PPE and depreciated accordingly. So we have seen this spare part case in our valuation, under repairs and maintenance cost, where there was high value equipment. So how do we charge depreciation, and how the difference between the depreciation and the market value, depreciated value and the market value, is accounted for as repairs and maintenance cost. Cost of small assets shall be written off in the period in which they were purchased as per the accounting policy of the entity. Like if you use calculators, okay, so calculator is purchased for the purpose of calculation and it's like an asset, but you cannot show calculator in your balance sheet. Those are all cost of small assets. So it will be written off or expensed off in the same year. It will not be depreciated or held in the balance sheet for the purpose of depreciation. So then, where depreciation for an addition of an asset is measured on the basis of number of days for which the asset was used for the preparation and presentation of financial statement, then the depreciation of the asset for assigning to cost object shall be measured in relation to the period the asset actually utilized. So here the important point is about spare parts. Once again, the method needs to be reviewed, but it doesn't say that you got to change it every year. And what are the methods of depreciation that you can use, and this needs to be disclosed. And then about addition and extension of the existing depreciable asset, and the assets which is available for use, which is not used but available for use. So these are all some important points that you need to remember. Got it? Because these are some exceptions. Next is interest and financing charges. Cost accounting standard 17. So there are totally 24 cost accounting standards. Apart from that, cost accounting standard 25 is just an exposure draft case which talks about inventory valuation, okay, which is a new scope for CMAs. So what does this interest and financing charges talk about? So I am directly getting into the principles of measurement. Interest and financing charges shall be measured in accordance with accounting standards notified by the central government under the Companies Rule 2016 and see with the Indian accounting standard. So here we are going according to that particular standard. Cost accounting standard says follow that. Okay. Interest and financing charges incurred shall be identified for what purpose? Acquisition, construction, production of qualifying asset, other finance cost for production of goods, operations or services rendered which cannot be classified as qualifying assets. That is, the interest and finance cost could be there for your working capital management or for your capital budgeting purpose. Whatever may be the case, interest and finance charges needs to be shown separately and it will not be included under cost of production. So interest and financing charges which are directly attributable to the qualifying asset shall be included in the cost of that asset, but not separately here. Interest and financing charges shall not include imputed cost. Coming to subsidy, grant and all those things needs to be adjusted or reduced. Penal interest for delayed payment like fines, penalties that you pay will not form of finance cost. Instead, it will be an item of reconciliation. Value do with reconciliation of profits as per costing records with that of profits as per financial records. So here if you see, in case the company delays the payment of statutory dues beyond the stipulated date, interest paid for the delayed payment shall not be treated as penal interest in this case. So penal interest for delayed payment, fines, penalties, damage and similar levies which is paid to statutory authorities or third parties shall not form part of the interest and financing charges. Interest paid for or received on investment shall not form part of the financing charges for production of goods, operations or services. So where will it be treated when you pay interest or receive interest for the investment made? Yes, where will you treat that? If you receive interest, okay, on the investment that you have made in shares elsewhere. So is that part of your sales? No. So that will come under other income category. Got it? So that will not be included here. So this is all about finance. So under finance cost, this particular thing is very, very important. Interest and financing charges which is directly attributable to acquisition, construction, production of a qualifying asset shall be included in the cost of asset. This is an important thing that you got to note. Okay. Then coming to research and development cost. This is very important because you may expect a lot of question on this. Cost accounting standard 18. Okay. So once again I am moving on to the principles of measurement. Coming to R&D, it shall include all the costs that are directly related to research or development. Research and development or research or development, whichever the case may be. What are all the things that needs to be included in the cost? First one, cost of materials and service consumed in your R&D activity. Cost of bought out materials. If you buy materials from outside, then the invoice or the agreed price, all the adjustments of discounts and all those are done. Then salaries, wages and other related cost of the personnel engaged in R&D activities. Of course, that is like an employee cost. Then whatever equipments that you use, tangible assets, in that case depreciation is allowed, and at the same time if it is intangible, amortization is done. Overhead cost other than the general administrative cost which is related to R&D will be included in the cost. Cost incurred for carrying out R&D activities by other entities and charged to that entity. Expenditure incurred in securing copyrights or licenses, this is your intangible thing. And developing computer software, cost incurred for design of tools, jigs, molds, dies, all these costs will be included under R&D. When you get subsidy, grant or incentive, this shall be reduced from the cost of such R&D activity. And any abnormal cost where it is material and quantifiable shall not form part of R&D cost. Fines, penalties will never form part of R&D. And the amortization of an intangible asset arising from the development activity shall be treated as per Cost Accounting Standard 16 related to depreciation and amortization. That is what we recently saw. R&D cost shall not include imputed cost. Credit and recoveries, of course, it will be adjusted for and deducted. So R&D may the main thing is all the cost that needs to be included in your R&D cost. So this is the area of discussion, the crux of Cost Accounting Standard 18. So this is the important thing you got to note. Then coming to joint cost. I think this will be the last one that I'll discuss for today, because too much of things is also very confusing. So what you got to do, what assignment that I am going to give you is, please take each and every cost accounting standard, just give a read through, write down the exceptional points that you find under principles of measurement. That will be the key points. Like in across all the cost accounting standard, imputed cost is excluded. If there is a variance caused by abnormal reasons, excluded. If there is any penalties, charge, fines and all stuff, it needs to be excluded. So these are all some common points. But apart from that, there are specific points which are there for each and every cost accounting standard. So you have to prepare your notes in such a way that those specific points are highlighted everywhere. So then it is easy to remember cost accounting standards. Okay. Then coming to cost accounting standard 19, that's the last thing that I am going to discuss for today. That is about joint cost. So here we have main products, byproducts and joint costs. There is something called split off point till when the expenses are common, and after that it splits off, wherein you can easily identify which cost goes to which product. But till such point, whatever is incurred before the split off point is called joint cost. See, joint cost are the cost of common resources used to produce two or more products or services simultaneously. Simultaneously is an important terminology. So when it happens together, you cannot avoid it or you cannot segregate it. You have to incur that. Like for example, when we look into petroleum extraction. So at the same time everything happens. When you put it in the furnace, the kerosene is produced, the petroleum jelly, and at one point of time you get petrol. So there is something that you cannot avoid. There is a joint cost that is happening till the split off point. So how do you treat that joint cost? See, split off point is also explained here. So I am directly getting into the principles of measurement. The principles and methods of measuring the joint cost up to the split off point will be the same as stipulated in other cost accounting standards. That is, you have to first understand the process of production. That is very, very important. Wherever you are going for a cost audit, it's not necessarily that you are not a technical person. But at the same time, you cannot avoid those technicalities saying that no, I am just concerned about the finance numbers. Only when you understand the process, it will be easy for you to understand how to allocate the cost. So understanding and study of the industry is also very, very important. So this we will do under cost audit program, wherein we will see what a cost auditor needs to do, what checklist he has to go through before conducting an audit. Now coming to principles of measurement once again, cost incurred after the split off point on products separately identifiable shall be measured for the resources consumed for each joint or byproduct. That we know, that we can easily do. Cost incurred after the split of point for further processing of joint or byproduct shall be the aggregate of direct and indirect cost. Cost of further processing of joint product or byproduct carried out by outside parties shall be determined on invoice or agreed price. In case the production process generates some scrap or waste, that will be the credit which will be deducted from the cost of the joint product. Any subsidy, grant or incentive which is received or receivable for any joint product or byproduct, it will be reduced. And penalties, damages, anything paid will be excluded from the cost of the joint product. So here one thing that you got to remember is measuring the joint cost up to the split of point. It will be the same across all the products. But when it comes to byproducts, separately you will load the cost for each of the byproducts. So identification of split of point and allocating the cost is very important. Okay. So that's all for today. So I would like to conclude the session here. Cost accounting standard 19 till 19. So we have another 5 cost accounting, 1, 2, 3, 4, 5 cost accounting standards that we will be going through in our next session, and then directly get into the cost audit program. Okay. And there are also general auditing, cost auditing standards. This is cost accounting standards. There are only 3 cost auditing standards that an auditor needs to follow while carrying out cost audit. So that we will go through. And there is also generally accepted cost accounting principles. Okay, GSCAP. So I will just take you through this also. So instead of going through the book, you can directly pick from our institute website and go through all these things. Fine. So that's all from my side for today. Have a nice evening. Okay. Good night. Thank you all.
Thank you, ma'am.